Hello, good morning, ladies and gentlemen. My name is Gifty Appiah. I am an Associate Director at PwC Ghana with a tax line of 7. Let me welcome you to this session of the quarterly tax dialogue series that is organized by the UK Ghana Chamber of Commerce, the UKGC. Let me start by telling you a little bit about the UKGCC. It was established in 2016, and the main aim of the chamber is really to facilitate and promote trade between the United Kingdom and Ghana via 3 platforms: networking, advocacy, and trade services. To know more about the UKGCC, please follow their social media handles. It should be in the chat box, or we'll put it there as the webinar goes on. If you'd like to become a member as well, by all means, please reach out to the team, but there'll be information as well in the chat box to help you do that. So today's session, we will be discussing the tax updates that are effective this 2024 following the budget. So a bit of background: on 15th November last year, our then Finance Minister, Mr. Ken Briata, presented the budget statement and economic policy to our representatives in the Parliament of Ghana. Now, one of the key policies as a country, we are looking to move from our current tax to GDP ratio of 13% to what is comparable with other countries, especially on the continent. So we are talking about 18 to 20% in the medium term. Now, in addition to that, we are also looking to grow our tax revenue by some 20%, by some 27% this year, sorry. So what this means is that tax is a very important part of the national conversation, and as individuals and corporate entities, we need to take taxes very seriously. So that is one of the main objectives of these quarterly tax dialogue series that we can all. So in the next 2 hours, we'll see what has changed in the tax space, especially in this 2024 year, and what that means for your business, what it means for you as an individual. So the aim is for us to walk away from here knowing what we need to do as taxpayers to remain compliant, and of course also contributing to the discourse. We will start off with 2 presentations that would be 2 seasoned tax professionals, and I'll introduce them in a little bit. When the presentations are done, we will form the panel, and then we'll go into the panel discussions. Presentations I expect to be about this, because we want to make as much time as possible to hear your questions and for us to really dialogue on taxes. Now, if you have questions, you can put them in the chat box, we'll read them out. Or if you prefer to ask the question as well, please by all means put up your hand. We will call on you so that you can ask your question. Let me tell you a little bit about Mr. Nuer. So he's currently the head of the tax policy unit at the Ministry of Finance. He's a career public servant with over 33 years experience in tax administration and tax policy. His last assignment prior to taking up the position at the ministry was as the monitoring and evaluation manager with the GR. So like I said, we see tax professionals lined up today's webinar. So Mr. Nuer, to begin with the first presentation.
Okay, good morning, everybody. Okay, good morning, ladies and gentlemen and colleagues. I want to share a few thoughts before this was mentioned. And To begin with, I'll have a quick introduction, then we'll look at the measures. Now, when it comes to fiscal policy, our fiscal policy basically hinged on Section 12 of the PFM Act, or the Public Financial Management Act, and it provides some policy objectives of which it will be good for all of us to look at, because it forms a basis for it. One is it involves revenue mobilization, basically to generate enough revenue to support government programs. Aside of that, the revenue generation will help us to keep some prudent level of public debt, because once we have our own revenue, it means we'll borrow less. There's some fiscal balance that is also maintained over the medium term. It helps us to manage some of our fiscal risk, and then at least we achieve some efficiency for the value for money expenditure. So these are generally the PFM objectives that we have. So what is government's policy direction when it actually comes to what's the name? Revenue generation? One is to collect the optimal revenue at the lowest administrative cost, keeping taxpayer compliance costs to lower. So keep lower administrative costs, lower compliance costs. Move from production-related taxes to consumption and income tax-related ones. Sometimes the issue when you're taking off some taxes, automatically we bring something else. Now we are saying that the ones that will support production will move a lot to those ones. And then when we produce and we've earned some income, then we will tax the income at that end rather. So it's more of a timing difference. So when we spend, then we make a payment. When we receive income, we make a payment. But the things that will help us to get the money to spend, we'll use less tax there so that we can generate money and then we can spend it and then the tax can be collected. Another one is to agenda voluntary compliance. We've had a tax to GDP target by 2024 for a while, but due to the current crisis, we've shifted this to around 2027. Ultimately, 2027, the target is to do 20% before 2027. But at least we are giving ourselves 20% because that's the target we fixed under our medium-term revenue strategy. I'll get to that one in a minute. So looking at revenue mobilization, as we mentioned, that's at 2022, around 13. The average is about 13.3%, within 13.9 in 2022. We pray that we'll do a bit better this year. We are finalizing the ratios and we'll give the final results soon. So let's look at the 2024 budget statement. What are our targets? Real GDP growth 2.8%, NDA inflation 15%, gross international reserves of not less than 3.3 months cover, and a fiscal deficit of around 4.9% of GDP, based on the commitments we made. Resource mobilization for 2024, total resource revenue and grants, that everything is 176. And then expenditure is 226 billion. So already we know that there's some deficit, which we will still need some financing to sort out. So what are our measures for 2024? And what is the basis for these measures? One, let's give a little background. We have a medium-term revenue strategy which we developed in 2023. And now, the first thing we did was that we developed a national revenue policy, as we called it, in May 2023, which was approved by government. And then that policy covers 11 thematic areas. It looks at direct taxes, international trade taxes. It looks at international tax. It looks at the environmental issues. It looks at our domestic competitive capacity, how we support domestic. It looks at extractive industries. It has a theme relating to non-tax, and a theme relating to tax administration, just to name a few. And out of that, we developed what we call the medium-term revenue strategy, which covers the period 2024 to 2027, which has also been developed and has been publicized. And it's supposed to support both the post-COVID program for economic growth and the SDGs 2030. So the idea is that if we work on these, we'll help be able to achieve these programs. Now, the strategy is available on the Ministry of Finance website. You go to the Ministry of Finance website and go to publications. There is a place there which covers revenue reports, and you find the medium-term revenue strategy there. There are a few other reports you find a study that was done in conjunction with IFS UK on providing a distribution analysis of the tax system, especially VAT, how VAT is distributed. So we have documents there which looks at the tax system, and a few other documents are there. We've decided that we'll continue to publish some of the research works we are doing over there, so that the public can have an idea of some of the things that go into our tax thinking. We've very often been accused of just coming out with things out of the blue. Just to show that we don't come out with things out of the blue, but there's a lot. And so the strategy, as we said, is meant to generate additional revenue to enable us meet the tax to GDP ratio of 18 to 20% per day. And basically, all the revenue measures we have for 2024 were derived from the strategy. Now, the strategy is up to 2027. So if you go and look at the strategy, you have a good idea of what we are planning to do in terms of tax over the medium term. And so it helps you also to plan for some of this. So I encourage everybody to go to the site, download the strategy, and have a look at it and how it affects you. There's a lot more details. So now to 2024, what do we have in the budget and how do we plan? What are we doing? One, in 2023, we moved to using gross gaming revenue as the tax, there was actually the corporate tax base for gambling entities. And so what was done was that some of those entities came on last year. Now we are moving to the private lotto operators and a few others who were left out in the second phase, and also bring them. So that basically their corporate tax will be, so their chargeable income, put it that way, the taxable income, with gross gaming revenue, which is all the revenue they make less the payouts. So that becomes their chargeable income. Then also there's a 10% withholding tax, which has been imposed on lottery or gaming winnings, which also will take off this year. We have the communication service tax, which was introduced around 2008. Now, when we implemented it, it covered basically mainly the telecoms and some of the ISPs. There were some other categories that were left out, which is going to put in place. So we'll have the internet service providers who are on, others who are not yet charging, and then the radio stations and TV stations also charge. We have what we call the modified taxation scheme, which will be also rolling out. It's actually in the Act 896, that's the 2015 Income Tax Act. We've been rolling it out in phases. Now we are moving to those taxpayers with annual turnover between 20,000 and 500,000. They will have a presumptive tax of 3% on their turnover. And basically, that's their income tax for the year. We reviewed the stamp duty rates and fees, which have not been reviewed for over 15 years. So those have also been revised upwards. The law is out. I'm sure we'll be able to. We also reviewing our VAT exemptions. So there are some VAT exemptions that are being taken off. I mean, the most popular one that has had a lot of public attention is the VAT on residential electricity. As I said, there are some of it which was already there. So that's one of the interesting ones that everybody knows about. But aside of that, we also removing the exemption on the sale of real estate, sale by real estate of residential accommodation. So those who build and sell residential accommodation now have to, for commercial, it's already being paid, but now this one is also going to be paid. The other exemption that's taken off is realize that we have a number of agric exemptions, but those were for those in agriculture. But a lot of those products are now being, should I use the word, used for non-agricultural purposes. So the law has been revised that once you bring those things in, if it's for agricultural purposes, those involved in it, there's a way of certification. You are certified, you get the exemption. If it's not for agricultural purposes, you don't get the exemption. The other thing that is there is on insurance. On short-term insurance, the VAT is being reintroduced. It was there prior to 2013. It stayed in 2013, but when the VAT on financial services was taken off, that's also being restored. And then the VAT on domestic air transport is also being restored. So those are a few of the exemptions on the VAT side which are being restored. And then the issue, and it's been a very interesting discussion on if there's a VAT also which was exempted in terms of textbooks and exercise books, newspapers and others that would be brought. But to improve the local and make the local market more competitive, the VAT exemption on imports of these items are being taken off. So local production will enjoy the VAT, but if you're importing them, then the VAT applies. Then the second thing that is happening is that in the VAT Act, there are some items which domestically are being charged VAT, but when they are being imported, the VAT is not applied. Generally because when the Act came into being, the customs tariffs were not updated, so that there's this discrepancy or inequity where if I purchase the item on the local market, I'll pay VAT. But if I import it, I don't pay VAT, which means the local manufactured items more expensive. So to correct this, an exercise is being carried out to ensure that anything that is taxable under the VAT Act domestically is also taxable when imported. The excise duty rate on cider beer has also been aligned with that of normal beer, so that they are all now 20%. Again, to avoid any arbitrage people taking advantage to generally, should I say, not undermine but undercut each other. The excise duty on plastics is also being expanded to cover imported items, in the sense that there are items which are paid duty on the excise on the plastics and what I'm using them to manufacture locally. But when they are imported, there's no excise duty on them, which again makes the local products more expensive. So the issue, a lot of the things we are doing are actually to support local industry, to make sure that our local entities are just as productive as everyone else. The next one, which also has attracted a lot of attention, is an emissions tax on industry and vehicles. So for vehicles, that's the internal combustion engine vehicles. For motorcycles and tricycles, there's an emissions levy of 75 cedis per annum. On vehicles, other vehicles up to 3,000 cc, there's a 150 cedi levy for the year. And then for vehicles above 3,000 cc, articulator heads, and then all the cargo trucks and others, they are paying a levy of 300 cedis for the year. Now, this levy must be paid on or before renewal of your license. So when you're reviewing the vehicle license, basically you have to so you have to pay before, and you have to provide proof of it to get your roadworthy certificate renewed. On the industrial sector, there's also 100 cedis per ton of emission, based on a certain threshold, above a certain threshold. You realize that we haven't really started that one because we are fine-tuning the guidelines to enable everybody to apply. But let us know that come the end of this month, we will have come out with the guidelines and we'll have to start applying it. To make the collection of VAT on rental commercial premises a bit easier for everyone, there's a flat rate of 5% that will be charged. So for those of us who are renting premises from people, let's know that there's a 5% charge. Those of us who are withholding agents are supposed to make sure that we pull that amount to pay to KRA. The other thing is that in 2018, the VAT regulations on health products, which provided exemption for some health products, was revised.
That's about more than 5 years ago. New products have come in, new raw materials have come in, and the regulation is being updated to take care of these active ingredients and the other medical items that are required. We've all very often been accused of not looking at medicine, but there's a whole range of incentives we give for medical products and pharmaceutical products. Then the other one is, in 2023, we introduced the minimum chargeable income concept, where if you made losses for a period of 5 years continuously, that's chargeable losses for that period. We would, you are required to make a payment based on 5% of your turnover, which will be used as your chargeable income. So that is also being implemented from this year. So when you're filing a return, you've been in a loss-making position, you've been making tax losses for 5 years, know that you're supposed to pay tax based on 5% of your income. The electronic invoicing system, which was implemented, started last year with the pilot, is going to be fully rolled out. I'm sure a lot of taxpayers a lot of you, I'm sure, have gone through the process of getting your systems ready. We expect that before the end of the first half of the year, I'm sure Mr. Naab will say a little more about it. We'll continue with the approval of reports of vatable goods by registered persons. So if you want to avoid paying additional VAT at the port on your imports, register with GRA for VAT, and you will avoid that. The other one is the use of the Commissioner General certified invoice as the basis for deduction for tax purposes. Now, basically, that if you want to have those invoices or your expenses recognized, make sure that you have a certified invoice from the Commissioner General as the basis for that expense. Otherwise, you will not be allowed that deduction. This is to help us ensure that people charge VAT and people pay VAT. Since when I'm closing up I'm summarizing, I'll talk about that. We'll also start implementing the WCOC framework of standards, where there's exchange of information. Unfortunately, a lot of us under invoice, misclassify, and do so many things when it comes to imports. There's no laughing matter. And so we decided that from our major importers, we start getting information directly from them on the values, the quantities, and the values of the imports that they are exports to us, or the imports from those countries. Simple fact, I think we need to sound a caution to everybody. If you declare, misdescribe, and do all the things that are being done, we will have the opportunity with that information to follow up on you. And please, when these things happen and the penalties are being imposed, note that it's our own malfeasance that has brought us to where we are. The other one is the definition of the Special Voluntary Disclosure Program. In 2020, we amended the Revenue Administration Act to enhance the voluntary disclosure programs, where if you come forward and tell us, look, there's this income that I've not declared for so and so period, or I omitted to include in my returns, or I haven't filed my returns or anything, and you come to register with GRA, what GRA will do is that, okay, they will accept the payment, but then they will not take any penalties. So if you haven't disclosed the thing for 5 years and you come, there won't be any penalty on it. If you come forward yourself, if GRA comes and finds out, all the penalties will be applied. And the flip side of this particular amendment is that if you make there's a particular infraction, and GRA does consecutive audits and find that the same infraction continues, the penalty is supposed to be increased by 20% of the value of the penalty of the amount. So every time if the penalty is 10% and you default in 1 year, and next year another brings out a same infraction, it means that the penalty is going to be 12%. So let's note that these things exist in the law, though they are not being applied. They are things that we need to be aware of, because one day GRA will start applying them, and then to 10 we will start complaining about things that already exist that are not. And so generally these are measures that are there. Then there are some reliefs too that we have for industry.
We've introduced a zero PET rate for locally manufactured sanitary towels. The other thing we've done is that on their imports, where they import raw materials which are not locally available, then they get also an import duty waiver on those ones. We extended the zero rate of VAT for local manufactured textiles for another 2 years. Also done the same for locally assembled vehicles. Now there's the import duty exemption for assemblers of electric vehicles, which will be managed under the Automotive Development Program. So those who are registered under the program, let's note, assemblers registered under the program, then we get the import exemptions. Then there's also, and it applies to buses also, then there's a VAT exemption on buses that are imported for public transport. Let's note that it's electric buses, not vehicles for public transport. So it's buses, basically for public transportation. Then there's an import waiver that is coming that will be on agricultural machinery, equipment, and inputs. The first one has been done, which is on fishing gear and basic fishing gear. The next one that will be done will be some incentives for the planting for foods and jobs, which we done before the year. And then while we continue to work on those for agricultural machinery, equipment, and inputs. So it is being taken, that particular one is being done in phases. So before I go to the thank you, I want to say thank you. But let's know that because we are under a fund program, we are not really permitted to do financing from commercial sources and some of the traditional sources we get funds from. And therefore, tax revenue has become very key and very important. And so the policy is to also improve tax administration and tax compliance. Everything will be done to support the taxpayers to comply. And also, when we fail to comply, let us know that the due penalties will be imposed on us. So I believe that as a way of helping ourselves, let's find out the things that relate to us in terms of taxation and ensure that we follow the rules. Because it's very, very unfortunate. I know Dominic Naab will say so. It's very unfortunate when we have to impose penalties. Nobody likes imposing penalties. But if the tax revenue is not coming in to help us develop our nation, then we will impose the penalties. And those are unpleasant. It's an unpleasant duty that we will carry out. So thank you for listening to me.
All right. Thank you. Thank you very much. Thank you very much, Mr. Noah, for that very insightful presentation. I think it's clear to us we have a plan as a country as far as taxes are concerned. And so maybe we all need to take a look at that medium-term revenue strategy to see where we are headed. And if we want to begin certain conversations, this is probably the time for us to start having those conversations. So thank you again, Mr. Noah. Like I said, we would have 2 presentations this morning. And the second one will be done by Mr. Dominic Naab. Mr. Naab is the Assistant Commissioner at the GRA. He is a member of the Institute of Chartered Accountants Ghana, a member of the Chartered Institute of Taxation Ghana, and a member of the Institute of Internal Auditors of Ghana. Dominic holds an MBA in Accounting and Finance from the University of Professional Studies in Accra. He did programs in financial management in oil and gas at the University of Texas in Dallas, in the USA. Advanced Fiscal Systems in Oil and Gas at CWC School for Energy in London and Amsterdam, and International Petroleum Law at IHRBC in Boston, also in the USA. Mr. Naab also did a program of taxation of international transactions at the Malaysian Tax Academy in Malaysia. Dominic is also an author and the title of his book is Oil, Gas, and Other Mineral Taxation in Ghana. So, Mr. Naab, over to you. Please take us through your presentation for the next 15 minutes. Thank you.
Yeah, thank you very much. And good morning to you all. We had the head of tax policy who gave us all that we need to know. Indeed, we have the same information, but I will probably look at it from the tax administration angle. As you are aware, the Ghana Revenue Authority has a simple mandate to administer taxes in Ghana. And what we have done over the years is to listen to our taxpayers and provide services that would ensure voluntary tax compliance. You would agree with me that over the few years, we have been able to actually automate our systems. You can file online, you pay online. We also don't accept cash in our offices, among other reforms that we have actually undertaken to ensure that our taxpayers have some amount of comfort to be able to play their roles as in registering with GRA for taxpayer identification number and tax types, also file their taxes regularly, reliably, and accurately, pay taxes that they are supposed to pay, not to 1 cedi more than what the law requires, and also to disclose their income honestly. Again, you would also realize that our tax law, if you look at it carefully, it is geared towards self-assessment. So it means that now the taxpayers have the opportunity to raise an assessment on themselves. This is geared towards consolidating voluntary tax compliance. And we try to follow it up with audit to ensure that they comply. So I will just mention some of the few things. I'm sure if you listen to Mr. Nuer very carefully, he had given us a very comprehensive, issues around the tax that we actually put together in the 2024 budget. But I'll just run through some few of them. As he mentioned, stamp duty. Since 2005, we never actually reviewed the stamp duty, act. And if you look at some of the rates in there, very ridiculous, and they actually do not give us some kind of realities in terms of the risks that they provide. You can imagine for about 15 years, we haven't actually touched it. So clearly, they are outdated. Again, we also realize some distortions, especially on the excise tax landscape. So we try to provide alignment between what we call the cedar beer and the excise duty on the beer that we pay, around to ensure that there's some amount of parity. Again, to also ensure voluntary tax compliance, what we have done is that we have reduced duty on plastics produced locally, and also expanded the scope to ensure that plastic packaging are actually also down under the excise duty purview. Again, we have this communication service tax that we have been implementing for some time now, but we want to actually bring about what we call the phase 2. And as I speak now, the Ghana Revenue Authority is actually putting together some guidelines and also talking to persons within that arena to ensure that we understand their systems and that we come up with guidelines that would reflect their business realities and get them to actually pay, taxes, especially the television stations and then the radio, stations. As for the those that actually on pay and per view, those ones will not have a problem. But the traditional ones is where we really have to, look at. But there's one thing I just want the business community to appreciate. That when it comes to issues around consumption tax, which VAT, communication service tax, is concerned, it is the consumer who actually pays them. You are only acting as a conduit to collect the taxes and pay it to us. Oftentimes, we come across a situation where some of the entities think that they are paying the tax. Yes, they could be paying on other areas. It's okay, but when it comes to what they directly are supposed to charge, they are collecting it on behalf of the taxpayers and paying it for the GRA. Now, again, the Commissioner General has had some difficulties in his tax administration, and that has to do with the receipts which are provided as basis for expenditures incurred. Now, he says that he administers VAT, he also administers direct tax. So now, an expenditure that will be accepted as deductible must actually have a certified VAT invoice. Other countries are practicing it. We should also be able to practice it. It doesn't mean that if you are buying from persons who are not registered for VAT, you can't go ahead and do so. But you should be able to provide basis for which the VAT has actually not been supported by the expenditure that you have incurred. The reason why we need to do that is to ensure that whatever that we are doing, we are doing it to support, this country of ours. COVID has taught us one simple lesson, that countries must now begin to look within to raise the needed revenue. Again, as the head of tax policy, mentioned, there have been situations where products that come from outside the country are imported into the country, do not suffer VAT, and those that are produced locally here, suffer VAT. Things like this do not encourage parity, do not actually also enhance what we call voluntary tax compliance. So we want to actually ensure an alignment, and within a short time, I believe that we'll come out with a communication on that. Then upfront VAT. Yes, persons who actually meet the threshold and voluntary taxpayers who want to actually register for VAT must do so. Now we have a lot of VAT registrable persons who do not register for VAT. So what we have decided is to come up with what we call the upfront VAT. When you import anything into the country, is that okay? Then we'll get you to actually pay the VAT. Now, it is not a new tax that we are imposing. It is just supposed to ensure that you comply with the tax laws. That is the essence of what it is. It is just to ensure we have what they call a level playing field for all businesses to be able to actually conduct businesses in Ghana. So the budget sought to say that we are going to continue with the operation. Ideally, as though we have every person who is registered for VAT, then we don't need to have this one. So it is actually an enforcement, tool geared towards getting people to comply with the tax laws. Then our tax exemptions. There have been many calls. I remember Dr. Ali Nachia and many others have made calls for us to look at our exemption policies. Indeed, that has been done so that we can have a very firm handle on how our exemptions, are supposed to be administered. How our exemptions are supposed to be administered. So we are also looking at the VAT exemptions to ensure that there's no abuse of the exemptions within the tax laws. So they're all supposed to come together under one umbrella so that the Minister of Finance would have a handle, on them. Good news for commercial property owners who rent their properties for business purposes. Now the VAT used to be 15%, now it is 5%. So you charge VAT of 5%, which used to be 15%. Now when you charge 5% of the VAT, then you are also required to charge the 1% COVID, alongside. So the rate has now been reduced from 15% to 5%. It is not every time that government talks about raising revenue, but government also tries to ensure that the business community has some amount of comfort. So I believe that this is one of the areas that is supposed to actually ensure some respite for some business communities. This does not include hotels and guest houses or inns. They would continue to charge VAT at the rate of 15%. But real estate developers are also now required to also charge 5% on their properties. Then expansion of the scope of zero-rated supplies. So locally manufacturing entities that print African prints and locally assembled vehicles. The law now says that yes, they have been given zero-rated status, and that has also been extended to two more years. The essence of this is to help them be able to actually produce at a cheaper cost and be more competitive. And we do know that if they are able to scale up their production, it will inure to our benefit by way of employment. So this is what the government, in fact, as and when the situation is assessed and then there's a need to actually extend it, that will be done. But for the time being, it is 2 years. The import duty waiver to cover import of raw materials for the production of sanitary pads and towels, as well as zero rating on locally produced parts. There have been some calls on this area, and government has actually listened, and a waiver has been granted in that regard. Again, as a result of the fact that VAT compliance at a point in time became very low, we introduced what we call the withholding VAT. It is not a new tax, but just to ensure compliance. Now, persons who have been appointed to withhold have been doing that. It has come to our notice that sometimes the withholdings are done or the withholdings are not done at all. Now, the law now says that if you fail to withhold, when you are supposed to withhold because the law appoints you as a withholding agent, then a penalty of 30% will be imposed. Alongside, you have to also pay for the amount that you ought to have withheld. But the law says that you can actually take a refund from the persons from whom you should have withheld after the penalty you had supposed to actually pay. Ladies and gentlemen, let's take note of that. If you are only a withholding agent, your duty is to withhold and pay same to GRA. Now, with that information, GRA is able to reconcile and ensure that persons who are registered with us actually declare the right VAT, to pay. VAT is a consumption expenditure tax. It's the consumer who pays the tax. You are only acting as a conduit to collect the tax for the Ghana government. So that's what we have to take note of. Again, we have reviewed our tax landscape, and now life insurance contract has now become taxable. It was exempt, but it has now been deemed to actually be taxable. And again, it is a premium payer who actually suffers it. So that now life insurance companies are required to actually pay to the Ghana Revenue Authority. Then electric vehicles. Investors seeking to assemble electric vehicles in country will be granted exemptions on the assembly knockdown of fully built units. This is also an area that business community can actually look out for to reduce their tax burden. Mr. Naab spoke about voluntary disclosures. What we have done in our law is that if you are a resident, your global income is taxable in Ghana. If you are a non-resident, it is income that is accrued in Ghana, derived from Ghana, that is taxable in Ghana. Oftentimes, we have had situations where some incomes that ought to have been reported in the country are not reported. Now, with this special voluntary disclosure program, it is actually an opportunity for persons who have earned income that ought to have paid their taxes in Ghana, haven't paid, would voluntarily disclose. and pay the tax. Instead of being penalized, they would actually be granted some exemption from that area. This is an opportunity that we all have as a nation to help our country be able to raise the needed revenue. Then, Mr. Danua also mentioned the import duty exemption on commercial electric buses for public transportation. So when you also go into this area, this is a very new emerging area for businesses to explore and to also have some duty exemptions. Now, some agricultural machinery equipment or tools that are not available in Ghana, when you also import them into the country, you are going to have a waiver. Again, we also do know that the minimum wage has been increased from 14.88 Ghana cedis to I think 18.15 Ghana cedis. This also means that the tax rates, the individual tax rates, will have to actually also be reviewed. And that has been done accordingly, given to the lower income earners some kind of respite. This the government does quite often, just to ensure that low income earners do not get, to suffer when it comes to tax, payments. And happily, the law has been passed, and I'm sure those who are enjoying have started enjoying, same. Again, fishing GIA. So an amendment has been made to provide a waiver of duties and on customs for the importation of fishing GIA for agricultural purposes. Is that okay? This is also aimed at reducing cost of importing fishing GIA. Ladies and gentlemen, thank you very much. Thank you very much. And let me just end by saying that if you fail to file your tax returns, there's a penalty to pay. If you fail to pay taxes that are due, there's an interest, to pay. Commissioner General is very reluctant in imposing either of them. But sometimes the law would also not be very kind on the Commissioner General when they are not imposed. If you have any peculiar circumstances, write to your tax office, explaining why you cannot file or why you cannot pay. Then the system will actually make, case for you or make room for you. But when you don't do that, and then these things are imposed, then it becomes a challenge. It becomes a challenge. GRA is not out to collect monies which are not required by law, but to collect taxes which are actually required by law. And we have always remained partners in national development. Thank you very much.
Thank you very much, Mr. Naab. On that partnership note, we would like to move into our discussion part of today's webinar. So, like I said, this is when the panel would begin the conversations. My two presenters are members of my panel. So we thank them for doubling as presenters and as panel members. Now, for us to enrich this discussion, I have another very seasoned tax professional. Her name is Gifty Appiah. She's an associate director at PwC Ghana. Gifty serves both public and private sector clients across various industries. She leads engagements on tax dispute resolution, including leading negotiations, providing technical opinion on matters, and coordinating the contributions of various stakeholders on issues raised by the GRA. She provides support in the area of tax compliance and consulting services by advising clients on the tax impact of their future and past transactions. Her experience includes conducting tax health checks and due diligence engagements, providing advisory services on the structuring of transactions and deals, assisting clients on GRE audits, offering tax provisioning services for financial statement reporting, making tax planning recommendations, as well as leading projects on tax controversy management. She's a regular facilitator for tax topics at the PwC Ghana Business School and has been involved in various publications. Notable among them are the Tax Facts and Figures and PwC's Budget Digest, which is PwC's analysis of the annual budget statement. So that said, welcome Gifty to the panel. Welcome, gentlemen, once again. So Gifty, I'll give you the opportunity to say a few opening words to us.
Thank you, Laura. And thank you to our attendees and online audience. Good morning. So I think Mr. Naab and Mr. Nuer have done some justice to what we are coming to already discuss, a good background. My take of it all is that I'm here to maybe try and manage expectations and try and address what I think the sentiments are from industry and the taxpaying community, because I interact with them a lot. I have day-to-day clients that I deal with. And for me, I had very measured expectations because we were coming from, and we are in IMF facility program. And at the same time, we also know that we have our external debt restrictions around those, borrowing on those. So we knew that there were some rigidities on how far government can manage around taxes. Let me put it this way. So because of those reasons and the fact that there are revenue expectations from IMF, we knew there wasn't much that could be done. But at the same time, too, the sentiment from the taxpaying community was expecting a lot more reliefs because we've come from where from last year there were so many tax measures that were either imposing or expanding the base. So what people were looking forward to were not necessarily a no tax imposition regime for 2024. The taxpaying community expected more, and more meant significant reliefs. What we saw from the presentations we've had now is that there were some reliefs, but the observation is that they were very niche, they were very targeted to particular industries, and also to some particular products, let's say sanitary towels, let's say agricultural inputs, pharmaceuticals. So the reliefs are there, but in terms of its intensity or getting into the masses, that's what the community is saying, that, you know what, we cannot feel it in our pockets, and we cannot also see the growth in our businesses through the tax measures. So I think all in all, for people and the impact of all these, they want to see a lot more incentives and reliefs that sort of promotes their businesses, because now what it means is that if you go from end to end, because we know that cost of production and inputs is high, you are going to source your input at higher prices. When you produce, it's true that some of the taxes are aimed at the end users, like the VAT as it came last year. But the thing is that some people don't have the luxury of passing on those costs to their employees, to their customers, because then they are not very competitive. So some have to reduce their profit margins to accommodate that and stay competitive. We've had cases where people have to literally fold that because the tax costs did not make their businesses viable again. And what we also ask for some of these measures is that, you know what, at the end of the day, people, the investor community wants some certainty. They want to be able to plan and not be at the edge of, okay, what happens tomorrow, right? Yesterday was like, there's a lot of uncertainty in the system. How does this operate? And beyond that as well, our questions around, even when the tax measures are introduced, do we have the systems? Are we ready? What are the guidelines to help in implementation of those new measures? And that is always a worry, because there's always either a lag between the systems being fashioned out to help implement these, or the guidelines to close some of the loopholes and answer some of the questions. So I think those are some of the key challenges. But in terms of expectations, taxpayers feel a bit disappointed, but at the same time, we knew that the government did not have a lot of wiggle room because of the situation that the economy is in.
All right. Thank you, Gifty, for your opening comments. I see that the questions from the audience are coming in. Please keep them coming. We'll get to them. But Gifty, listening to you, I was actually worried, and I was going to ask Mr. Naab, given the reliefs that have been introduced, and looking at the fact that we want to increase tax revenues by about some 27%, right? I was going to ask him, what is GRA going to do in order to be able to raise those amounts? So, Mr. Naab, I'll get to you in a bit. But listening to Gifty, it appears that taxpayers generally don't seem to think that the reliefs are a lot. It's a case of, yes, we have seen them, we are grateful, but could there have been more? Mr. Nuer, maybe from a policy perspective, could you give us some guidance on what was targeted? I know that you had mentioned one of the main reasons for these targeted reliefs was, especially for some of them, you wanted to promote local industry. But now it looks as if there's a sort of balance that the tax community is saying we didn't get right. From a policy perspective, really, can you help us understand the thought process that went into determining just the reliefs we got, and if there are discussions of any more coming up?
All right, so let me touch on two quick things and I'll come to this. One, the issue of tax certainty. We have the MTRS, which I said gives us a good idea of what government is planning to do in terms of taxes for the next few years. So, let's look at the document and prepare ourselves. Well, second thing, on the issue of guidelines, I think there's some misconception. The Commissioner General does not have to issue guidelines before a tax is implemented. This issue of guidelines is a very recent thing that came up. He can issue the guidelines to help with, and the most of the time, the guidelines are normally for his staff. But then there are a few things to do to the public to help the public to understand the tax and prepare for it. But it's not a prerequisite for implementation of any tax law. Let's note that. And so sometimes we say we are waiting for guidelines before we do this. Once the law says start at this time, effective date is effective date. The law is not looking at what anybody else does. If you have a problem, ask the Commissioner General to help you out, but don't wait for him to come out with guidelines and say that it's based on the guidelines. The law does not provide for that. He might come out with practice notes later when there's an issue of interpretation. And once people are coming out with different interpretations, and he said, okay, look, this is the way I will look at it. Then he comes out with practice notes. So guidelines practice are not a prerequisite for implementation of any tax at all. Now to the issue of the reliefs. As we mentioned, the reliefs, we are looking at local industry. Basically, that's where the reliefs come in. And so you realize that we don't tie a relief to, should I use the word, this is a relief for non-residents, or this is a relief for this. If it says a person, then it's either you are an individual or you're an entity, you qualify. What we did for sanitary towels was quite, if the materials are not available locally and you import them, you get a waiver on them. If they are available locally, use the local products. Then the VAT was taken off because the VAT is basically on the consumer. So we're expecting that the entities, and we are having a conversation with them, that the VAT that has gone off should reflect in the prices. For those of you who've been using textiles, realize that textile prices have not really gone up that much, apart of when the dollar rate changed and then other inputs. But when it came to VAT on them, textile price, local prints manufactured locally had been stable for quite a while. And that's some of the things we expect. Automotive program, again, we are looking at locally manufactured vehicles. And so the emphasis is on those under the program,
sometimes people tend to say that, yes, but the companies are foreign companies. Yes, they are foreign companies, but they are they registered local, what should I put it? Local entity companies to do the work here. And so, though the parent company will be a foreign company, it's a local entity that gets it. When the foreign entity is importing, if there are any restrictions, it applies anything, it applies to that import. But it's just a local market. So the rationale, as I said again, is to support local industry. Agric products, as we mentioned, those that are being used for agric was the title. So if you get insecticides and you're not going to use it on your farm, you're going to use it at home. That wasn't the purpose of the incentive in the first place. It was for those for use for agric purposes. And so those are all the things so that we are sure that it goes there. Because if you're going to use it for your home and I'm going to use it for agric, then there's a competition if it's at the same price. But we are saying that just for agric should go to agric. And then those of us who are using it at home, we can pay a little more for it so that we can get the agric to grow more food and get for us to buy at a cheaper cost. So generally, the release were looking at local industry. We had a little fight over it with our external partners on some of these ones, but we just had to keep our. We insist that we're there to help our industries grow.
Yeah, thank you, Mr. Noah. So maybe picking on one particular relief, which had to do with the sanitary towels. I think, yes, I understand the policy really was for us to support local industry. But the peculiar thing about that relief specifically was that there had been some advocacy, right, about making the products more affordable, especially to people who could ordinarily not afford them. So now, coming on the back of that advocacy, could we not have extended that to include the imports of just that particular product? Or have we some feasibility study went into determining that there's local capacity to provide for everybody? And so if you are brand sensitive, then you should really be able to afford what is important.
Okay, let me quick one. That's an interesting. We've been doing a study on this for over 3 years. Actually, we have more than enough local capacity to supply the market, and some of the companies are actually even exporting. That's the interesting fact. Then when it comes to quality, we checked from the FDA. Someone was saying the quality. FDA said that. They didn't say that the quality is better. They said that it's of standard qualities, of international quality, the local produced items. An interesting thing is that when we engage with civil society, and they will tell you, I had an engagement with them, quite a number of them didn't even know that we had local production. And those things produced locally were about half the cost of what is being imported. So if I take off the import duty on what is being imported, we will be pushing out our local industries, because then the imported ones will come down to their price, and then they don't become competitive. So, and some of the brands that we think are imported, actually a few of the brands that are local. I mean, Laura, you know that some of the brands are local. And I said, unfortunately, even the civil society people were making the argument that when we had a discussion, they didn't even know about some of these things. I was surprised when they were ladies and I'm a gentleman and I knew about it. So long and short, if we touch the imported ones, we make our local industries uncompetitive. And I don't think that's what we want to do.
Right. I think that's a fair comment, Mr. Noah. Mr. Naab, so we've been talking about these reliefs, right? And the fact that we are still looking to grow our revenue. What should taxpayers be expecting really? Are we going to have a year where GRA is quite aggressive in terms of the audits they will be doing? What is GRA really doing to be sure that despite the reliefs and no really major introduction of a new tax, you would still meet these targets? I'm sure as taxpayers around this table, we want to be certain what to expect from the GRA this year.
Yeah, thank you very much. I hope you agree with me that GRA has not been aggressive. We only just apply the tools available to us. We have not been I'm not defending GRA. I'm only just restating facts that you know. What yeah, what it is that we have compliance measures, then we have enforcement measures, which the law allows. So depending on what the situation is, we apply the most appropriate one. That is what we do. But going forward, I can assure you that we expect more cooperation from the taxpaying public. We expect collaboration. We also expect that persons who are hiding and earning income and not paying, let's together expose them. But they are really not helping our economic development. For us to be able to go far, then we need to actually work together. So that is what it is. We are going to actually be ourselves as we have always been. We will not want to collect more than what the law requires of us to collect. But we also expect the public to actually cooperate with us. If for any reason there are issues which are, worrying your business, we are human beings in GRA. Engage us. Let us know what the issue is. After all, taxpayers are on self-assessment. So if you're on self-assessment and your business is not doing well, let it reflect in your tax return. If your business is also doing very well, let us know so that we can praise God for that. So that is what we intend to do. Collaboration, partnership, and cooperation for the public. Thank you very much.
Right. Thank you, Mr. Naab. On the subject of cooperation, let's circle back to the special voluntary disclosure program. Mr. Nuer mentioned, and you mentioned as well, that penalties will be waived once you step forward. I think for the business communities, one of the big concerns is the issue of interest, right? So businesses would want to comply, want to step forward and disclose if there are any gaps. The question is, what happens to the interest? Because it hasn't come up very clearly on this call. And from the conversation, it appears as if we are sticking with the penalty, but there's also the interest rate. So could we get a bit of clarity from maybe Mr. Noah first, and then Mr. Naab, you can add up from the GRA perspective as well.
Okay, thank you. This, this conversation has come up as to whether the interest is part of it or not. When we look at the law specifically, it talks about penalty, it doesn't talk about the interest. Now, when it comes to interest and penalties, there are two, should I say, reasons in separating them. The penalty is for an infraction, for not doing what you're supposed to do. The interest is for holding government money for a period of time, which ordinarily, so the government is saying that we loaned you the amount. You're supposed to have paid it to me. You didn't pay it to me. If you had gone to the bank to borrow the money, you would have paid interest on it. So we are charging interest for keeping our money. It is not a penalty for an infraction. So let's note the difference between the two. So what we are saying is that for the infraction, will allow you the benefit of, should I say, taking off the amount that you should have paid for the infraction. But for holding our money, for which we had to go and borrow money and pay interest on it to other people in order to spend, we'll collect that interest that we paid from you. So let's know the difference between the two. And that is why it's on the penalty that you get the relief and not the interest. That's the way. If after the interest has been charged you, and you still continue to default, then under the law it becomes tax that is accessible, and then we can look at it as a penalty. But in the first instance, we will not look at it as that way. It's money you've kept, and we want to collect that money from you. So the VDP, and there was a question actually in the chat. The question is, the VDP is on all taxes. The RA is to all taxes. It is on all taxes. Once you come forward and you make that disclosure, then you are allowed the relief of the penalty. It's on every tax, and the guidelines basically spell that one.
I think it's anyway you made it clear on this webinar. Let's be certain that it is the penalty that is being waived, but the interest will definitely be determined, and that would be payable. So I'll get to the questions in the chat in a bit, but I wanted us to talk a little bit about the emissions level, because it's one thing that has generated quite some conversation. I think, Mr. Nuer, you even mentioned it in your presentation. So I would want to start off with Gifty from the taxpayer's perspective. What are the general views out there in terms of the emissions level? Are we ready?
Okay, Laura, thank you. So I think when Mr. Nuer was talking, if I heard right, he actually confirmed that they are hoping to start by end of this month. Mr. Nuer, did I hear that right? I think so. So I think we can nail that it's not operational from that end, from experience and feedback from clients and the community as well. It's not operational yet. But in terms of, are we ready? Obviously, we are not ready. That's why it's not effective. But beyond that, I think the questions out there is there's supposed to be a way to measure. That's the biggest concern out there. How do we measure? We have some relevant government bodies that are supposed to work or collaborate with GRA on this. And there has been very diverse views, even for the vehicle parts. What happens in the beginning, it was more of, okay, you go to DVLA when you are renewing your roadworthy. You probably are expected to pay there and then continue. There's also the thought of maybe might not necessarily be linked as paying there, but you should probably just show evidence of payment, which is what the law says also, before you pay. I mean, before you renew your roadworthy and all that. So that is exactly is not being implemented, as he said. The measurement comes even clearer when we get to the measurement, and then also the relevant body to work with in collaboration comes even more concerned when it comes to the business side, where they are supposed to measure their carbon dioxide equivalent emissions. And it's a big question, what is that, right? Because for those that is not familiar with or don't work in those industries, those who are more familiar with maybe those in energy, manufacturing, they probably have experience with this, with this whole big talk about ESG and all. I think it's become familiar for some people. But for the majority out there, what does it even mean? How do we measure? Are we going to use are we going to use, I understand that maybe EPA, some people say Ghana Standard Board is already doing some with some of the some companies for other purposes. So I think that's the big question there. We need to get it clear, hopefully before the end of the month, as we are saying that we are hoping to make it effective from next month. We will be able to make these clear. Are people supposed to find ways of measuring it themselves? If we are going to rely on an existing infrastructure from some of these bodies, how are we going to make it on a mass level, replicate it across the masses to be able to measure? And, for every system, we operate a self-assessment system, right? So people would still want to be comfortable that what GRA has assessed them or what has been measured, they approve of it or agree. So there needs to be that transparency that an independent taxpayer can also align or check for themselves and be comfortable with what they are paying. The law has asked for some kind of estimations at the beginning of the year. And so that also puts the onus on taxpayers. How do they even make those estimations? What does that entail? So I think these are some of the questions. And those are the questions that came up when the communique came out that it was supposed to be they said it was supposed to be effective at the beginning of the year, right? And then we started asking all these questions. But with that, I think with your permission, maybe we would hope that Mr. Nuer maybe or Mr. Naab could help us answer those questions. I'm sure there are plans on the way to get those queries and concerns of the community addressed.
Yes, thank you, Gifty. I thought surely as we have EPA and the Standards Authority, we should be ready. But like you said, Mr. Noah is here, so let's hear from Mr. Noah and Mr. Naab.
Okay, I didn't think I said we were not ready. But we said effective date is 1st January. What I said was, okay, let me just go back and say, okay, let me just give the answer. Now, for the vehicles, as the law said, you are supposed to pay taxes, as Mr. Naab mentioned, are paid on using the Ghana.gov platform. So you're actually supposed to go on the tax type is there. You would select which vehicle category you fall in, and then you make the payment on the electronic system. So the payments are free. Now you're supposed to make that payment before you get to DVLA. Because when you get to DVLA, they will check to see whether you made that payment before they issue your roadworthiness certificate to you. Basically, that's the simple thing. So make the payment as you make any other tax. You get your receipt, you go there. The only thing is that there is a short code that can be used to check whether what you are providing as payment is true. So there's them to check on the system just to be sure that you paid. So you have your payment that you've attached. They will confirm it and then they issue your road. So for the vehicles, is that straight, very simple. It's actually started. So, and the issue is that if you need roadworthy and you haven't paid, you are supposed to pay. So make sure you pay it. Because if we check and the roadworthiness has been done and you haven't paid, then it means that you defaulted. So, and that system has been there since the beginning of the year. So it's something that we are supposed to do. That's on the vehicles. On the industrial emissions, we realize that we provided the sectors that we expect to pay. So it's not everybody, every Tom, Dick, and Harry who is supposed to pay the emissions levy. So we have the mining, the oil and gas, we have the manufacturers, we have the electricity generating, all the categories that we have there. They all are there. And to me, interest you to know, some of them, even all of them, are already measuring and providing reports to EPA on these things. So again, it's not something that came out of the blue. It's something that some of them are doing already. And so they will continue. I mean, as soon as we came out with it, I got somebody sending a computation. We had to tell the person about it. I sent a computation that, are you saying that I have to pay this much? The person already knew the emissions the person was coming out with. And I was asking us whether you should pay that much. So people are there already. The only thing that we did was just to allow some, what's the word for it, to help people do a little hand holding for people, for some of them who really haven't been complying. And let me use the word here. The people who are supposed to be reporting the emissions have not been complying with reporting on the emissions. So it's not as if they were not supposed to be doing it. They are supposed to be doing it and providing the reports. They have taken it on themselves not to do so. So if you're supposed to do it, you haven't done it, and the law has caught up with you, I don't think you should blame the law for catching up with you. You should blame yourself for not following the law. But then, as we said, we are doing some hand-holding. That's why we've taken our time over it, to get people to understand exactly what they're supposed to do, and then they can start. And as Gifty said, you are supposed to self-assess yourself. So I'm not supposed to come to you and tell you that this thing. I'm supposed to assume that you already know how much you're supposed to pay. And if you didn't, the question is really, okay, I don't know how to do it, are you supposed to sit down and wait for me to come and tell you how to do it? Or you're supposed to find out how you're supposed to do it? I think these are questions I think we need to ask ourselves generally when it comes to taxes. There's information we are supposed to obtain and do things for ourselves. The Commissioner General will do his best to explain and to educate and to sensitize. But there's still an obligation of us, whether he sensitizes or educates or not, for us to make the payment. So we need to find out how we need to do it also. And so it's a two-way affair when it comes to tax education. The government will do its part. We on our side too should do our part. Then together we make progress. But when the burden is put on just one government, the government hasn't done this and hasn't done this, and so I'm not paying my taxes, the law doesn't cut it down. And then it becomes a tug of war between the two parties.
So just as I've mentioned, let me repeat it, and quite a number of the companies are already required to provide that information. And so they have a way of measuring it. There are those who haven't started, and so we need to help them to do it, which we are considering how we can help them to do it. But then in all of these, let's note that it's a self-assessment system. And so you're supposed to tell me that this is what you have to pay. And then I come and certify whether it's correct or not. So I think let's look at it from those two angles and we'll make progress. I don't know whether Mr. Naab will add anything to it.
Thank you very much. I think that you've said so much. I don't need to belabor, the point, except to say that when it comes to issues like this, which probably are very contentious, or maybe the law may not be so clear, then the Commissioner General will come in. As we speak now, the Nuer is aware we are developing some modalities just to make it easy for people to appreciate it and to be able to comply. For us, as HRA, what we are interested in is to be able to achieve voluntary tax compliance. When people on their own would want to actually pay tax, that is where we are trying to actually get to. And that will only come about when we see that the country is ours. Together, we need to actually, build the nation. Then we would comply voluntarily. So whatever it takes for us to clarify the law, for us to communicate effectively about what the taxpayer is required to do, we'll do that in the interest of our nation. Thank you.
Right. So thank you, Mr. Nuer. Thank you, Mr. Naab. Let's stay with the emissions levy a bit. I know that people who have tried to pay but have been unsuccessful. So maybe on the vehicle part, because obviously on the corporate side, we still need to do some work. And like Mr. Nuer said, we should go fully operational soon. But on the vehicle part, maybe something GRA needs to take another look at and together with the policy unit, because I know people who have tried to pay on the platform and were unsuccessful. So that's just by the way, so that the education is a whole lot more. If they are missing something, then they can do it. But away from just raising the funds through the levy, the other question is, part of our policy reasons that we really want to win ourselves of these cars that actually cause these emissions. Because if I do not want to pay the levy, for instance, not because I want to evade the tax, but really because I, as well as a person, want to move away from the fossil fuels to maybe something greener. Are there plans to wean us off of paying these emissions levy, so that if I buy an electric car today, for instance, the way the law is, I wouldn't have to pay. But am I supported to buy an electric car? Are there enough charging points around? Are there special arrangements for maybe people who want to begin from a hybrid? I think these are some of the questions that individuals have as well. Or is it the case that as long as there's no infrastructure, we have to keep buying these fossil fuel cars and have to keep paying emissions levy annually? Mr. Noah, I see you smiling. So, please.
Yes. Because interestingly, there are charging points in the country. There are people who are using the levies. Now, I sit here as a public servant. I really don't have the time, but now I'm sure I've started putting up some charging stations in anticipation of that. It's an opportunity for entrepreneurs and investors. I mean, that's what it's creating. It's creating an opportunity for people to go into some of these things. Now, yes, if you have an electronic car, it means that you're not going to pay the emission levy, because you don't emit anything. What you might have been faced with is the electronic waste levy, where if there's any waste that comes, so that you make sure that you don't also create a liability for us on that side, but you're making sure that things are done. So, but generally, I mean, yes, we don't have that much infrastructure, but there is some infrastructure available for doing some of these things. And so as we go on, and there's an EV policy that's basically coming out.
I'm sure other this year. The idea is for it to come out this year. If it's finalized and comes out here, to explain all the things and the steps we are taking for it. And it's not just EVs we are looking at, the other things that we're looking at apart from the ICs. The ICs will be around for a while. So the issue is that there's some negative impact which we need to start working on. And so we started gradually getting these things to work on them.
All right. That's good to know, Mr. Noah. So let me look at the questions that our audience have for us, and I'll read them out. So the first one I have on my console is from Albert AJ, and he wants to know how much revenue has been collected so far from the 10% gaming winnings. So that's the withholding tax. How much have we realized so far at the state? I don't know if Mr. Naab has the figure.
Oh, I don't have the data here. I'm actually in Koforidua on a program. Yeah, so I don't have the data. But I believe at the right time, Commissioner General will come out.
Okay. So Albert has a follow-up question, and he's asking what has been the immediate observed challenges in the implementation of the 10% withholding tax on the gaming winnings. So maybe to add to his question, the way we structured the law is not really just cash payments, right, Mr. Naab? So one big question, for instance, would be, what happens to prices that are paid in kind? What happens with this withholding tax? So maybe together with Albert's question, if you could address it for us to have some clarity.
When it comes to issues about payment in kind, the law makes a provision as to how it should be computed. It is based on market value. Is that okay? But I mean, there isn't any tax handle without challenges. But what it is that we always try to actually engage and then find a common ground so that we can all, comply with the tax.
Right. Thank you, Mr. Naab. So we also have another question, and this was one of the things we're going to talk about. So recently, there's the notice that has been issued, and if we look at Mr. Nuer's presentation, and he did mention that we wanted to encourage VAT compliance. So one of the things we are looking at doing, and the Commissioner General has actually issued notices, is that if you do not have a valid certified part input, you cannot claim a corporate income tax deduction. Now, I would like to start off with Gifty because she's really representing that constituency of tax practitioners and taxpayers. So maybe Gifty, let me give you the opportunity to maybe voice out the concerns that have generally been raised with respect to this new directive.
So I think generally there may be two major concerns. Is one, the VAT Act is through the VAT Act and the requirement that the VAT invoices are issued, right? And we are aware that the base for charging VAT is very different from the deductibility rules for corporate income taxes. They are very different. The two regimes are very different. What we appreciate generally is that we also sometimes complain that the tax laws do not talk to each other, or we are not using efficiencies under one tax types to the other. So from that angle, I think the community or most of my clients and taxpayers really applaud the intent behind it. Let me put it that way, where we are trying to move everything for VAT, we are trying to move everybody to the eVAT and the electronic device and all that. So we are trying to leverage on that, capitalize on that power we have on another tax type, and which is a good intent. But I think the big thing is that, and Mr. Noah brought in that thing about guidelines, right? When the law is clear, it's not a problem, or even when it's clear to the average taxpayer, that is fine. But if we have questions, especially for a tax consultant to have questions, then the ordinary man on the street has a lot of questions. So it's a matter of how do we bridge that? Because then everybody interprets their way and there'll be no fairness. and things won't be, people's competitiveness will be affected, right? So that is why when it's not very clear, we like that there's some kind of guidelines so that people play on a level playing field and people don't interpret it anyhow. So back to this discussion, it's a matter of, so for this, there are a lot, and that's the questions people are asking. Not everybody is registrable for VAT, right? Not everybody has to issue a VAT invoice. So what happens? Somehow, I think between Mr. Naab and Mr. Nuer, it's been addressed somehow that do it to the best of your interpretation. When you have issues, we would handle it without the guideline because it's out there. But then it becomes very cumbersome for the person that is supposed to implement it, because taxes are also supposed to be easy to implement. So if I have to now go and audit the status of that person giving me the invoice to now settle on whether it was right that they did not give me VAT invoice, I have to go back and see, especially if what I have bought is not more than 200,000. How do I know the person's lying to me that they should have actually given me a VAT invoice and they did not? Because I can't make that decision from just my purchase. I can't run those conclusions. So I think there's a gap to be bridged to address those issues. That is one. And then the big thing is, when the notice came out, we make reference to Section 9, which is about the wholly, exclusively, and necessarily. For that basis, we should use the VAT invoice, right? The question is, we believe that there should be more in terms of the legislative authority behind this. That has to something we expect to see in the Income Tax Act. And we are open to education. So please educate us on the basis on which we think that we do not need an update to the corporate income tax law. And by circulating a notification like that, we can start asking the taxpayer community to bring out a VAT invoice before they can take out an income tax deduction, because I have not seen it. And I struggle to see how the kind of prerogative and the subjective decisions that the Commissioner General has can actually cover this kind of powerful, requests from the taxpaying community. So I think, Laura, those are the two biggest concerns: legislative authority, and then the two laws don't talk to each other. So it's going to be very chaotic without some guideline.
Okay.
Yeah.
Thank you. Let me quickly come in there. I'm sure Dominic will give a lot. So I'll start from there. I'm still wondering where we have stated that the supporting legislation is Section 9. I'm still wondering. Maybe some people have said it.
From the communication, yeah, from the what you circulated, yeah.
Oh, okay.
So
Right.
what is publicly
so the circulation basically is that so if that's where you're coming from, what we are saying is that for the Commissioner General to accept some expense, it must be, as we know, the wholly, exclusively, necessarily for incurred. Okay. Now, the issue is that how does he, one of the ways in which he determines that is the ones he will use to determine it. Let's note, one of the used to determine what Section 9 is the use of the invoice. So, the Commissioner General's invoice, which is what has come out. Now, I was having I've been answering some of the questions in the chat, and this thing came up. When we look at the Revenue Administration Act, and if we really want to place this thing, if we're more in the Revenue Administration Act, we talk about administration, which cuts across both the VAT and income tax. If we want to place, if we were going to put a law, then that would be the best place not put it in the Income Tax Act or the VAT Act. The Revenue Administration Act talks about the notices and the forms that the Commissioner requires to implement a tax law. So we look at Section 22, we look at 27. That's why we're having a chat. There's a place he talks about keeping a record. He determines the document, the invoices, and others. Somebody just, one of the personnel said that, yes, an invoice. He says it's a VAT invoice, what he's saying that keep. That is what he's saying keep. And so we can still go on with the discussion in terms of the legal basis, in terms of, but there are several legal things that we can use to support it. The other thing that I want to understand that no one is saying that if the person is not supposed to charge VAT
you must necessarily get a VAT invoice from the person. So I went to buy something from the website. I've gone for a conference, I've run out of pens. I need to go and buy 2, 3, 4 pens. But I might not necessarily I might go to a website person and buy it, who is not required to register. But some of these people are actually still supposed to have registered for the flat rate. Because anybody with 20,000 turnover, within the 200,000 and the 500,000 is required to do flat rate. So you realize that there is most of the people really are supposed to it. So the issue that when you are buying from somebody who is supposed to, there are those that you know necessarily are supposed to be VAT registered. Make sure you get a VAT. If you don't get it from that person, and the person is not registered, is not supposed to register, mean that there's an issue. And I know Gifty raised it. How do I know whether the person is supposed to register? For a lot of our larger companies, talk about the MSMEs, they have their issues. But for a lot of our large companies, the people we deal with, we give them contracts and the other things. We have a good idea of their turnover. So, yes, there's some category of people who have a problem, which is why we are looking at the guidelines and working on how to cater for those categories. I'm not saying that we don't want to cater. We are trying to cater for it. But there are those who do not have that problem. And so let's look at those who have the problem, isolate the challenges. As Dominic said, every measure sometimes has unanticipated consequences. You look at them, you resolve them through practices. Where there's the need to make some changes, we make the changes and move on. So the issue, let's start with the ones we start with. Those we have the challenges, we are addressing them as we go along, so that at the end of the day, everybody voluntarily complies. So where is within our power to move, let us do it. Where is not within our power, we can hold on. But the other thing is that, you see, and it's the other side of the coin. We want people to be compliant. We want people who are undertaking, what's the word to say, who are dealing in fact-able products and are supposed to actually charge. What the rest of us can do is that let's buy from those who are registered. And let's realize there's something we need quickly that is. Now, if we start buying from those who are registered, those who are required to register will register because they know that no one will buy from me, especially those of us who are doing large or medium to large enterprises. Once we start doing that, other people start being compliant, and it helps everybody. So there's another side to the coin where this thing is supposed to help people to be compliant, not just you, the person who is buying, but the person who is also selling. So that's the bit. For example, let me just come. When VAT started, I know that there were some entities who dealt with, who even though their customers or clients were below, suppliers were below the VAT threshold, they were asked to register voluntarily for VAT so that those people could be sure that they'll get VAT receipts and they can get the input VAT. And now there are some companies that is their policy. If you are not VAT registered, they don't deal with it. So let's also look at our policies and see how we can help the system improve and be compliant. Sometimes, yes, we made a complaint, but the complaints really, how does it help all of us? Thank you.
Yeah. So thank you, Mr. Nuer. I think listening to Gifty and also reading Ibrahim's comments, he has the same concerns. The question really becomes: laws must be clear, and as the authority who has the power to cause amendments to be made, why don't we just put this into law? That's one way of looking at it, so that it's clear on both parties, and we don't spend a lot of time on the back and forth with the legal basis. So that's one thing to consider because you have all the power. But that's another conversation to be had. The second thing is that as taxpayers, the question really becomes, what is GRA doing in terms of ensuring compliance of these people who ordinarily should be tax registered but are not? Because this implementation listening to the talk, makes us seem as if the duty to get these people to actually comply and charge is being pushed onto somebody else who is probably complying and doing things right their own way. So, Mr. Naab, the question is, what are GRA's efforts in making sure that the man on the street who should be registered for VAT is registered, rather than sort of, quotes, punishing an innocent person for the crimes of the one who is actually guilty?
Thank you very much. GRA's efforts are visibly monumental. We are all over the place. we are all over the place. We are on radio station. You have created a webinar for us. We are discussing this. We are all over. But the truth of the matter is that we need to work hand in glove to build this country. You, the taxpayer, knowing very well that you are not registered, that is a crime. You don't want, you have committed a crime, and at the same time, you are waiting for me to come and fish you out. That is unacceptable. But having said that, the truth of the matter is that we are all over the place doing education, talking to people. We have enforcement officers who are going around. As soon as we have any information about you, we try to actually get in touch. We are doing that. But we cannot do it all alone. We need a cooperation of all. If you have a neighbor who is an itinerant business person with a suitcase moving around, he has no premises where he can be tracked, report that person to us. And there are many like that. Consultants, no office. In fact, his house is his office. No signboard. Businesses are done online. These are some of the challenges. I will not sit here and say that GRA has the magic wand to bring everybody on board. But we are doing our best, and we also think that you have to also help us be able to get all persons registered. That will make our burden lighter. Once everybody is paying, then I'm sure Mr. Nuer would recommend to the minister to reduce some tax rates for us to have a comfortable country. Thank you.
I hear you, Mr. Naab. We want to help you, but please don't punish us to help you. Encourage us to help you instead. So I think
there's this bit I want to actually share. We have Informants Award. Persons who give us information leading to recovery of taxes. There are some payments that were made to such persons. Please, persons who are listening to me, take advantage. At the last time, somebody came to my office and took a check of 96,000 Ghana cedis, just because he has given information that led to tax recovery. Let's think about that. Even if you don't want the money, you just report the persons. Thank you very much.
We hear you, Mr. Naab. So I think we have less than 15 minutes on the clock, so I'll go through our questions quickly so that we don't go over our time. So I believe, Ibrahim, we have addressed your questions somewhat, but it's an ongoing discussion, so let's keep it going. Richard wants to ask you, Mr. Naab, when the practice note for the 5% VAT flat rate on commercial rental will be made available, and maybe added to that, can you give us some clarity on the treatment of the COVID health recovery levy as far as this flat rate is concerned? Is it a 5+1? Is it a 5/101? So maybe that would clarify things as well. Mr. Naab, if you could quickly take that.
Oh, okay. Yeah, thank you very much. The flat rate of 5%, I even thought the person would have preceded his question with a praise for the government by reducing the rate from 50% to 5%.
Mr. Naab.
Okay, that's on the lighter side. Yeah, so the 5% is okay, is a VAT. Then the COVID is 1%, so that makes it 6%. Is that okay? So if you are, that is, if it is imposed, if the VAT, the taxes are inclusive, there is going to be 106 for you to be able to establish the addition. But if you are not imposing this, it's on the taxable value. Then it's going to be 5% on that. That is for the VAT, and then 1% on the total amount. But it is inclusive.
Okay. So
because the denominator becomes 6 in that case. Just as the VAT flat rate of 2%. That's how it is.
Right.
The practice
and then he's asking when the practice.
Yes. I would check, but I think not too long it will be out. But we thought this one is so clear that we don't need any practice. But if we need it, why not? And I'm sure Gifty has also developed one. The PwC has also developed something like that, I'm sure, that they are sharing.
Right.
Gifty, confirm.
I'm not sure Gifty has the power to issue practice notes, and our listeners want practice notes. So, Mr. Naab, we are bringing this back to your doorstep. So we have another question, which is asking, why does GRA expect us to pre-finance VAT? According to the law, we can only issue VAT invoice for all transactions. In cases where clients do not pay those invoices, what are small businesses supposed to do in order not to erode our cash flow, especially as withholding tax are being withheld by the clients who pay? So they are asking if I have a 60-day, if a client pays me 60 days, but I must account for my VAT in 30 days. Why is the law requiring me? Well, the person saying, why is GRA expecting me to pay the VAT before I actually get the cash from my customer?
You see, when it comes to issues about VAT, you may have your business model where you sell on credit, but the VAT, as much as possible, the law makes a provision. VAT collected in a particular month should be paid on or before the last day of the following month. So once you know that, then you need to actually model your business such that you are able to collect the VAT. Otherwise, it becomes a challenge. For GRA, you must account for it. Once you can't account for it, then that becomes a problem. Why don't you engage your customers to appreciate that when it comes to the taxes, that is not your area of authority. It is somebody else's area, and the person has given, or the law has provided when it should be accounted for, so that we don't run into trouble.
Thank you, Mr. Naab. So somebody else has a question under section 71 of RA on interest for late payment of taxes. So for this person, if their books are in USD and they pay late, they must pay interest. Now the question is, the policy rate is a CD denominated rate, right? So they are asking, applying the 125% of that rate on a USD tax liability. It's a bit much. So this is sort of like if I was taking a loan in US dollars and taking a loan in CD, the rates would be separate. But it looks like for this, whether it's denominated in CD or not, we are applying the same rates to determine the interest. Mr. Noah, I think you have something to say, so I want to hear.
That's a very interesting. The issue is that you are supposed to be dealing with cities. You have decided to peg it to the US. So really, you are supposed to convert the thing to cities and apply the rate. It's the same as if whatever, if I have money and I'm paying interest on it, whichever way, I convert the things to cities and apply the rate. If it happens that I decide to keep it in USD, I apply the rate. It's the same thing, just that I'm just using different currencies for it, that's all. But it's the same amount, the same penalty. So whichever denomination is, the penalty rate applies. Basically, that's
so, Mr. Noah, the next question is actually for you. The person is asking if you can share the security features to look out for on the CG certified VAT invoice.
Yeah, I think it was because the person asked whether we could identify the security features earlier, and I answered if there are security features on the invoice. What we actually doing, and I think Dominic can confirm that what we are trying to do rather than to create an app where you can put the invoice number in. So we are doing it for tax transactions. You put the invoice number in, and then the system will tell you whether it's authentic or not. At least we thought it was easier than security features which everybody might not necessarily be able to see. And it's not all security features normally that you tell everybody on. There are some which are secrets, so that people, if someone decides to forge, you know the difference is on it. Just like our notes, we have the line, the silver line in it, which tells us on this. You look at it in the light, there are some things you see, but there are some things you don't see. It's only the trained system that can tell that someone is busy, so that not all of it is out there. So I'm sure when we finalize all these things, we'll share it with everybody for the public to know the ones that they should count for.
Sounds good. That should help. So we have another concern on the TGT universities being the only backup for deduction for CIT purposes. So it's something Mr. Nuer, we need to take a second look at again. Another question says, thanks for the response of the VDP. Could you kindly share a link to the practice note referred to for the VDP? The only practice note I can see is the previous interest and penalty waiver act. So, Mr. Naab, is that available on the GRA website? Or first of all, is there a practice note for the VDP already? And if there is it on the GRA website?
Hello?
Can you share a link?
We have started engaging the stakeholders on it. So very soon I'll do it. It will be available.
All right. So
we always want to have the buy-in of the stakeholders so that we can reason together. So once that is done, it will be available.
Yeah, very necessary. So then for the one who has the question, when it's ready, I'm sure it will be put up on the GRA website. And then there's a question for you, Mr. Noah. Again, it's on the directive. So we are not going to go into it. Obviously, there are lots of concerns from the business community. So we please ask that you go back and take a look at it. Now, this one says, please, Team GRA, we have gone live on EVAT implementation since 1st December 2023. Until date, we keep having serious issues. And then the person lists some of the issues. The server goes off, the relationship manager is not helping, and the system is not being fixed to suit mining companies who are exempt. So I think this is more of a complaint. Seeing as we are going into the second phase of this EVAT, I don't know who the best person is to address this concern. Mr. Naab, this taxpayer seems to still be having challenges on the EVAT, and I know that there are some others as well who are having issues they're trying to resolve. What is the next step from here? Because these are examples of taxpayers who are looking to comply, but business is being frustrated by some of this process. So, Mr. Naab, what should this taxpayer do, especially as we are looking at expanding the numbers in the second phase? What are we doing about these challenges?
Okay.
Hello, Mr. Naab.
Laura, it seems Dominic is not up. So, what I mean, the person should contact us afterwards. Then we'll do a follow-up. The person should contact us.
Okay. So, please. All right. Yeah. So, I think that's Mohammed. Please reach out to Mr. Nuer and Mr. Naab. They are very helpful, so they should be able to give you good guidance. And anybody else who's facing that problem. This question says that the 30% penalty on failure to withhold on VAT applies if one also fails to withhold on the supply of goods and services. It's not a very clear question. Is this normal withholding tax we are talking about? But I think Mr. Nuer and Mr. Naab were clear that this is specifically for people who have been appointed to withhold on VAT, not the general withholding on goods and services that we have, but that the interest regime will still take place. Bright says, I produce and sell tea bags to direct customers in some shops to sell. The direct consumers usually buy as little as 2 or 3 packs, while the shop orders for about 20 packs. How can I introduce VAT on my pricing and it will not make my products too expensive to the direct customer? Thank you, Mr. Noah.
I think this one, you should pay Gifty something to explain to. Okay, but simply, you see, VAT is based on your turnover. So your question is, what's your turnover for the year? Is your turnover for the year that determines whether you register for VAT or not. So though you sell 2 packs at a time, or 3 packs at a time, or 20 packs at a time, at the end of the year, or for the particular quarter, what is your turnover? If your turnover falls beyond the 200,000 threshold per annum, then it means you are required to register for VAT, to charge either standard or to charge the flat rate. So that's where the person should look at it from. If it's the standard, you get the input VAT. If it's the flat rate has no contributor side that you've been given some national VAT input in order to come up with the flat rate. So I think what the person should rather look at is how much is what they. Yeah, basically you should look at his turnover. That will determine whether he's supposed to charge VAT.
Right. I don't know if Gifty wants to add anything.
If you consult Gifty,
okay,
so that
right.
you can just pay some small charge.
No, I'm good, but I think that's what Mr. Noah said. I get the person's sentiment. It's more from the commercial side, but unfortunately, that's how the law is. So once you meet the threshold, unfortunately, you'd have to register. So now you have to look at conversations around pricing and also I think Mr. GRA is happy to hear if we also want to promote small businesses. So if there are difficulties in settling some of these things because of I'm sure they would be willing to listen to and then flash out a payment plan of a sort, or a varying the timing of payment if possible.
All right. Thank you, Gifty. Let me apologize to the audience. We are exactly on the clock at 12. We still have a few more questions. I indulge you for us to go through this, but we'll round up in the next 10 minutes, please. So so this is somebody who is saying that there are taxpayers out there who are doing all they can to be compliant. And there are times when even the tax rules are not clear. So for instance, the Forex loss rules that were introduced last year, and consultants can't even agree on the effective date or what exactly the interpretation of that amendment was. So yes, they recognize that you can approach the commissioner, but sometimes it takes too long. And then they don't get clarity to pay on time, there are significant penalties. So Mr. Noah, that's feedback for you that sometimes when taxpayers approach the commissioner, maybe for a private ruling, maybe asking for guidelines or whatever, it takes a bit too long. So maybe that's some feedback for the GRA and your unit as well to look at. Madam Laura, can you give us some takeaways for this webinar before you end? Well, let's end and let's see, seeing as we are running out of time, I would see what I can do. But the good thing is this webinar is actually recorded. I think it's live. So you can always go back and play back, and you should be able to get all the messages that have been given. That's from Getry. Someone says, what if you demand the VAT invoice and the supplier or vendor says they don't have? Mr. Noah, again, that brings us to the issue of this directive having a lot of challenges that people are complaining about. So we probably need to take a second look at it. I think you have said what you need to say, Mr. Naab has also said it, but there are questions we need to answer. So if there will be guidelines, that would be good, especially for people who don't register or are not required to register, know what to look out for with all of these questions. Someone says, why do the COVID levy still exist? Why does the COVID levy still exist? I learned His Excellency announced the last COVID-19 address that the COVID-19 pandemic is over. Maybe I'll hand this over to Mr. Noah because he set up policy.
All right, so quick one. If I answered the question before, let's know that there's a difference between somebody who's not supposed to register to charge VAT and someone who's required to register. So if the person is supposed to be charging VAT, and you know the person is supposed to be charging VAT, the person is not issuing you an invoice. then don't deal with the person. For me, it's that simple. Just deal with somebody else. That is the thing, because you need the invoice. There's a difference between, as I said, the one who is not required to register, who cannot issue you an invoice. But the person can't issue an invoice, and refusing to issue an invoice, tells you the invoice is finished, or my manager is not in to issue the invoice. Some of those interesting things. Don't deal with the person, because it will go against you. Now, on the COVID-19, the law gave a sunset a period for it to end. It hasn't ended. And let's remember that during the COVID time, yes, the pandemic ended, but we incurred debts that we have to pay. And that's why the levy came in. The levy came in after the pandemic. It didn't come in when the pandemic, it came in after the pandemic to help meet the expenses that we had incurred. And so that's why the levy is still there. The levy is still there. We'll do our best to keep to the, what's the word for it, to keep to the sunset clause, because there's a period for it to end. But as of now, it hasn't ended. Let me answer. Right. There's a question now. Let me answer it again, because I mean the two
on the COVID lecture.
No, not on the COVID lecture. By getting us together, how to get in touch with me and Mr. Naab. And then
we'll get to that,
okay,
Mr. Nuer, so don't miss anything yet.
Okay, very good. So should I answer right away, or you want to?
No, the COVID, please answer.
I've answered the COVID
right
question.
away.
I've answered the COVID question.
Okay.
Yeah.
Then I missed that.
What I said is that the law gave a sunset clause, a period for it to end. It has not ended yet. The period has not come yet. The period for the levy to expire has not come yet. The COVID pandemic is over. But the expenses we incurred debts, which the levy is supposed to help us to defray.
So our expenses have not been covered. So the pandemic is over, but the levy will stay with us for a while. Kofi. So Mohammed, basically for the last two things, Mohammed and Janine, I hope I got your name right, are asking how they can get in touch with you. For Mohammed, his concern especially is on the EVAT. So I don't know if you want to put out a number, Mr. Nuer, for Mohammed to get in touch, or should they go through KGCC to get your contact or come by the office?
Okay, so two things. They can go to the nearest, and I think I want to debunk the first part of the statement. I don't think that we say people should contact us, and then when they contact us, we don't do it. I think that is not true. I think a lot of the people can attest to that. That even if you call us, and we always call back. So I think let's correct that one. But then they can go on the GRA website. There are contact numbers there. There's a chat there that you can go to and use. And person solution, you can go to the nearest district or the GRA taxpayer service center. They have all the lines, quite a number of them. You can always get somebody to talk to on some of these things. And the issue is escalating. We are, as Dominic was saying, GRA is working on improving the customer experience. They have a whole unit now for customer experience, just to make sure that this feedback and these things get done. And so, Mohammed, I assure you that once you get in touch, you always get in touch with the managers. We would always get back to you. I have a very public number, so don't worry.
All right. So I think that's it. Someone is asking when the sunset period of the COVID-19 is. Is not in the law. So I think that may be the concern of the person, that may be something the policy unit knows. And so they are asking if you can give us that inside information.
Yeah, my memory serves me right, it should be 2025.
It should be 2029.
Yes.
All right. So thank you for that. We are out of time now. Gertrude, you asked for us to run through two takeaways from here. If there are two takeaways for me that I think you should take away from here, it would be the second phase of the EVAT project that has been launched, and GRA is working towards getting all taxpayers on that portal. It also helps as well for your customers to be able to know especially if you are registered, to have no issues with your invoices, because you'd be getting what is coming out of the system that has all the markers you should have. Like Mr. Nuer alluded to, they can check once all of the systems are up themselves to see it's okay. So that's one thing that as a business community we need to take away, and probably start approaching GRA on how to get onboarded, because sometimes it can take a bit of time so that you get onboarded. The process starts with you quickly and we can finish rather than wait for the crunch time when we are at a point where we want to get everybody on and then it becomes a race against time. If you need PwC help as well, we are happy to do that. There's a bridge that we can give to your systems to GRAs to help do that. But importantly, contact GRA, because this is an important compliance measure. And I think, as Mr. Naab said, if we are all paying our taxes, then maybe Mr. Nuer had proposed that let us reduce the PUI rate, for instance, for all of us. And who knows, maybe even the corporate income tax rate. And the second thing is, as Mr. Nuer mentioned, we have a medium-term revenue strategy document. Please, as business owners, as part of the business community, even as individuals who are citizens, please take a look at that document, because it gives you an idea where we are headed as far as taxes are concerned. So those will be the two major takeaways for me from this webinar. I would like to say thank you, first of all, to UKGCC for organizing this. I would like to thank my fantastic panel members, my fantastic panelists. Thank you for making the time. I know you are busy, but you've had time for us this morning to share 2 hours of your time with us. So I'd like to say thank you on behalf of the audience. And I'd like to say thank you as well to our audience. You've been fantastic. You've been amazing. You've been engaging. Thank you for your time. And we look forward to seeing you at the next quarterly tax dialogue series. Please remember to follow UKGCC on their social media handles. They're on all of them: Facebook, Instagram, X, LinkedIn, everywhere. And if you would like to become a member as well, the information has been provided in the chat box for you. So thank you everyone for joining us. We hope to see you at the next webinar and have a lovely day. Thank you.